hello everybody. How y'all doing? What's going on, friends, neighbors, countrymen, Russians? Do you remember the movie The Saint with Val Kilmer? For a while, that was like my absolute favorite movie of all time. I don't know if you've ever seen it. Last night, I got out of bed because I needed to watch Rocky II. So I got up and got my old laptop out, got my Apple AirPods out, and went on the couch and watched the first 20 minutes of Rocky II until I realized I was going to be up until 1 o'clock in the morning watching that movie if I didn't watch out. Well, anyway, thanks for being here, everybody. As you can see above or below or wherever you on our video today, we've got a great little old sale going on. It's not a little old sale. It's a big, beautiful sale. Like, imagine a big, beautiful sale banner draped over the front of our online business. Anyway, we're having a big tent sale, the Scenorial Day. Free hot dogs for the kids and whatever else. But it's a sale on the robots. Check it out. We'd love for you to check it out. I love the crap out of you. Now, speaking of robots, I have been obsessed with two things for the last 12 months of my life. Finding robots that work, finding robots that can trade the markets when I can't look at the markets or don't want to look at the markets. I'm obsessed with this. Number two, robots that reduce the drawdown or that don't sort of chew up the entire account while they're waiting for trades to become profitable or don't go through giant losing streaks. And in order to really get reliable data, there's always been this, or to get reliable testing, there's always been this question in the back of my mind: do I need to download tick data? Do I need to download and use specialized tick data so that my modeling quality goes up in my testing? And will that affect the reliability of my results? Well, we've been doing some testing in the last few days. Dr. Bill in Los Angeles and Frederick in Luxembourg and I have had this little mini test going on. And definitively, it does look like having this tick data is increasing the reliability of the results. It does appear that that's the case. And today we're going to do some backtesting right on my computer. We're going to jump in here and we're going to do some backtesting. And we're going to get our modeling quality up to 99%. And I'm going to show you how I've done that. So let's take a look. We're going to look at a robot and look at some testing. And I'm going to share my screen with Nate. And that'll just take us a moment here. And Nate, we should be looking at my screen, and it will take me just a moment to get this done right. Okay, so let me scroll down here. All right, you're looking at some settings. All right, on my screen here, this is my Windows VPS, and I'm using the Tick Data Manager, Tick Data Suite. And as you can see here, my VPS is in the throes of downloading tons of data from 2014 to 2017 for a bunch of different currency pairs. And you simply download and install the program, and you click on download. You choose your date range, which I've chosen 2014 to the present because, as Bill and Frederick and I have kind of talked about, 2014 was a terrible year for our robots, and early 2017 was a garbage time for the robots. So it makes sense to include those years. So those 3 years will give you a look at trending markets, ranging markets, markets that hate our robots, and markets that love our robots. So I use Tick Data Manager to download that data. Now, once that data is downloaded, it's automatically available in your MetaTrader installation. You don't have to do anything special. You just run a test, and I'm going to show you exactly how that's done. So here's my testing MetaTrader account, and I'll walk you through exactly what we're looking at. I chose the robot that I want to test, reversal arrows with ADX. That's a robot that uses reversal arrows, which I've talked about recently on the show, and the ADX to determine trend strength or the weakness or strength of a trend. And we're going to use tick data. So I checked this off and chose use tick data. I'm going to test the 5-minute time frame. I'm going to put in a spread of 5. That sounds reasonable to me. We're just going to run a simple test here right now. And we'll just test from 2014, beginning of the year, to 2014 to the end of the year. And I'll show you the settings on this robot that I'm talking about using. This is the reversal arrows with ADX included in the robots package. The magic number distinguishes robot trades from discretionary trades. Slippage is 5, max spread is 5. That prevents the robot from opening trades when the spread is too high or the slippage is too great. The first trade size is 1 mini lot. Second trade size is 3 mini lots. We're going to trade this Finch style, which means we can open up a maximum of 2 trades. And we will wait until those trades are profitable. We will just let the market bring those trades into profitability. There's no stop loss on these trades. Now, you can run this robot with a stop loss. We're not going to test that today. We're just going to take a look at this. Pips to trade 2 is 70. That means that if the robot enters trade 1 and it's a loss, and that loss goes for 70 pips, then the robot can start looking for a second trade after that 70 pip loss. No stop loss, although we could add one if we chose. Our first trade profit is $10, and our second trade profit is $10. So if we open trade 1, we're looking for 10 pips. And if it opens up a second trade and it's a loss, we're still just looking for a 10 pip win or $10 win on 1 mini lot per trade. And we're not using profit targets or stop losses, and we're not using break evens, and we're not going to play around with the ADX. That's it. That's the whole thing. So we just are going to click OK. And then we've chosen our date range, and we click Start. Now, what the robot's going to do this time around is it's going to use tick data in the test. That means our reliability, our modeling quality is going to go way up, and the reliability of our results are going to go up. So the tick data suite is going to more accurately mirror true market conditions, which I think is, I think that's pretty important. Okay, I always like to kind of get a look at what's going on in the trades as the test is running. Because I'm running this on a VPS and not on a local Windows computer, it takes a minute. There's some lag time here. So here we are. This is the graph. I love looking at the graph as the test goes on. Look at all those results. And look at the report. 99% modeling quality. Total net profit was $165. Drawdown was pretty substantial, $2,437. That's a 12% drawdown in exchange for a pretty small net profit. Let's make sure this test is done. Okay, so we made it all the way to the end of 2014. Okay, this is looking reasonably good. Now let's take this test. Let's go all the way through November 25th of this year, and we'll start the test. And now we're going to extend this out. So that test worked. Let's run it from 2014 to the present, and let's see if this works. Do we have any questions that came in along the way, Nate?
No, just a lot of people saying hello and
a lot of people saying hello. All of our prize books were shipped yesterday. All of them. If you won a book on the show recently, then your book is on the way. They all shipped. Everybody's books are on the way. And we have a whole new batch of purple envelopes for the books that we send out next. So we will be running, we're going to wait for those purple envelopes to come in. But in the meantime, if you could leave us a like or, say, hey, Rob, or tell us where you're from, or, whatever else, or ask us a question for the show, we'd love to hear from you.
Actually, Sal, one of our book winners, is with us today from New Jersey.
Sal's with us from New Jersey. He's from Brunswick? No, that was an Ohio address. Anyway, we're not going to tell you where Sal's from. Sal's the one that knew there was a Cuban place to eat. That's what Sal said. There was a really good Cuban restaurant we could go to. And if we flew into Newark, we could do the show. We could do this show on the road while eating Cuban food. We could do that. I don't know if Sal agrees with that, but I think we could do that. Look at these backtesting results now. Now we're getting a whole lot more trades. And now the robots. So it got stuck in 2014. No doubt about it. It got stuck. Now, it didn't lose everything. It didn't draw down. It didn't blow the account, which some currency pairs and some robots will do. It looks like it made it through 2014. And if you see the results here, you can see it's going to make $10 per trade. And every once in a while, it will have a loss. Every so often, it will have a loss. And that loss will be small. Here we go. Here we'll find a loss here in the results. if we can. It's got a lot of winners here. Oh, there it is. So we had a $70 loss or a $69 loss, but a $98 win. So that is when the robot goes into a losing trade, and that losing trade has gone 70 pips negative, it can open a second trade. And then those two trades combined work together to try to make a net $10 profit. And then at the end, hopefully it's able to do that. It looks like this test is almost all the way concluded. Let's see here. Getting to the end. We're in 2017 now. It looks like we may be stuck in a trade from January of 2017. Hey, warts and all, if this thing just stinks, then what can I say? Just if it stinks, it stinks, right, Nate? If it blows up, it blows up. I'm like, what are we going to do? Oh, it looks like it got out of that trade. Looks like that trade in January, it took 6 months for that trade to close, but it did close. It did get out of that trade with a profit, and that's going to contribute to the drawdown. And it's going to be reality that sometimes this system is going to produce a trade that gets stuck into, okay, and at the very end of the test, it had to close both trades at the end. It wasn't, it ran out of time, so it closed everything at a loss. So including those two losses at the end, which it wouldn't really have because it would keep going and it would work its way out, including those losses at the end, total net profit of $2,478 up here in the upper left, drawdown of about the same, so a 12% gain for a 12% loss. That's pretty reasonable. That's not bad. We can improve on this. And it looks like this made it through. So even with those losses, that those losses wouldn't have even existed, even with those, this seemed to work pretty well. And this is on the Australian dollar, Canadian dollar, which works great for reversal trading robots because it's a highly correlated currency pair. I say what we do next is we try a simple optimization. So we'll click on Expert Properties. Now, my favorite thing to optimize recently is the second trade profit target. I want to see if increasing the profit target on trade number 2 can result in a higher overall profit for the robot. And let's do something crazy. Let's test a profit target that starts at 10 times larger than the first profit target. So instead of going for $10, we're going to go for $100. If it opens a second trade, we're now going to say, hey, our back is against the wall. We're going for broke. Let's go in steps of 100, and let's test up to $300, meaning now what it will do is it will go through this same batch of testing, and we will see if we can increase the size of the profit on trade 2 and if that can win. Now, we have to check the box next to second trade profit. Ordinarily, you might test 10 different profit targets, like start with $10 and go all the way up to 100 in steps of 10. But we're going to do something interesting here. We're going to click Optimization, and then we're going to click Start. Now, as that's going, that's going to take another few minutes here. It may even take 5 minutes. And during that 5 minutes, we might read a section out of, I don't know, we might read a section out of a book. We might have let's make sure this test is running correctly. And as long as it's running correctly, maybe we'll read a little section out of How the Mighty Fall by Jim Collins. Now, if this test goes on for, I don't know, 25 minutes, we will not be continuing the test. So I'll let this test run. When we're ready to come back to the screen, Nate, I'll let you know when that seems to be done. Now, you've heard that old saying that you can open up, if it's a good book, you can open up that book to any page, and you'll find something worthwhile and interesting. So let's do that with a couple of books here. Let's try this out. Appendix 5, what makes for the right people fit in with the blah, blah, blah. All right, I just said I was going to do this, so let's do this. Wow. Let's read about Scott Paper. From 1981 to 1988, embarked on a dramatic turnaround, a revolutionary transformation designed to shock the company out of its stupor. Scott Paper instituted more pervasive incentive pay, put hundreds of managers through retreats to imbue them with a new mindset, making the company dynamically reborn, hired strategy consultants to help reshape the direction. Initial results looked good, but then profits dropped, fell into restructuring doom loop, with $167 million in restructuring charges, followed by $249 million, followed by another $490 million loss, for losses totaling, coming into 1994, $1 billion. Brought in a fix-it CEO from the outside who slashed jobs, cut costs, and sold the company to arch rival Kimberly-Clark. This is a fascinating lesson from the book How the Mighty Fall. There is something called a doom loop, that once things start to go wrong, that some companies and people will exacerbate the problem and create a bigger problem than even originally existed. This is great. This is a great point. So if you have a bad trade, you can make it much worse by trying too many things and a dramatic type of giant solution in all at once or in many different ways. The trading analogy is that what some people will do is some people will, when faced with a bad trade, for example, they'll have a scatterbrained, crazy approach to doing all kinds of different things and then end up sort of blowing the whole thing. That's a good point. That's a good point. I don't know what happened with our optimization. Something went bananas with our optimization. So I'm going to come back over here to our optimization. Oh, it was working. What a jerk of a program. So now I have to stop and restart these optimizations all from the beginning after we just spent all that time having reading out of a wonderful book together. Well, we'll let that run one more moment. We'll see if that continues. And while that's running, you can leave it. You can leave it on the screen, Nate, and we'll just here. I'm going to read a section out of Pitbull, a book which I poo-pooed and said was probably worthless the other day. I watched the market plummet all day, and by late afternoon the Dow was down 190 points. All everybody was thinking was, here we go again. It's going to be another crash of 87. Perfect. I knew exactly what to do. During the crash of 87, investors ran up the price of bond futures, figuring that since the bubble had burst in stocks, people were going to move money out of stocks into fixed income securities and bonds. The bond futures market closed at 3, so at 2:58 I loaded up. The stock market was open until 4, and as stocks continued to plunge, bond futures skyrocketed. I quickly dumped my entire position in the secondary bond futures market. I'd made $70,000. Not a bad day, but I was sure the best day was yet to come. I didn't think this market was like the one in 87. What I think is interesting about this quote, as we wait for this test to never finish, is that this guy basically loaded up on a whim. Does that sound like a really great idea, Nate?
Yeah, great.
And then he got lucky, and he made money from it, so he got to write a book about it. Like, I wrote a book about getting lucky, but I think I'm willing to admit that there's zero chance that that was my own skill. Like the book Adventures of a Currency Trader, a copy of which I don't even think exists in this office, that is, honestly, that's a book about how I got lucky. Right place, right time, loaded up. And how that could have gone really wrong really fast. What we're doing now today, as this backtesting seems to just go on forever and maybe the optimization won't work, the lesson is, I think true success is going to come over time from compounding small gains. True success is going to be the result of figuring out a method that you could implement automatically and reliably, that you're not trading on a whim or trading on a feeling or saying, oh, this looks like 87. I'm going to load up on bonds with 2 minutes to go in the session. That sounds like a recipe for, if it works, it's going to be a really great book. But for most people, that doesn't work. Because when you have a feeling, I got a feel, it doesn't really work. Like having a feeling about the market is probably a giantly terrible way to run your strategy. Anyway, this optimization is going to go on and on forever. So what I'll do is I'll take a screenshot of this optimization and we'll see if a $100 profit target, a $200 profit target, or a $300 profit target worked best. And it does occur to me that we need to start running these tests probably, I can't believe I'm going to say this, probably from a Microsoft Windows computer in the office. Probably need to do that. But if we did that, I guess we could draw on it and we could mark it up and yeah, I mean, that could be kind of fun. So, maybe we'll look for a second-hand, cheap Microsoft Windows computer that we could run these back tests on from the office. Don't forget, we've got a sale on all these robots right now inside of the website, and you can click the link above this video, below this video, anytime you want, and that'll jump you over to the Botathon end-of-year blowout sale. Scenario Day, hot dogs for the kids, bring the family on down, big tent outside the store. None of that is actually true. The sale is true, but we don't really have a tent anywhere in the office or anything like that. But we do invite you to jump on board, come get the robots. We'd love the crap out of all of you. Thanks for being here with us, and we'll see you tomorrow. Bye for now.